Scott, what is your outlook for private equity heading into 2026? It certainly has been a major theme in 2025.
Yeah, it's kind of the same as it was coming into 25, but in 25, we hit a bit of a speed bump in Q2. I think we're really optimistic about how capital is going to flow through the industry and the opportunities that investors are going to see with private markets in 2026.
And can you talk about the benchmarks you use? Because a lot of it is pretty opaque. People really don't know what's on the other side because, of course, it is private.
Yeah. So interestingly, 20 years ago, I had a meeting with George Roberts, and he said the only benchmark is the public market benchmark. But I think a lot has changed. And yes, things are opaque, but there is increasingly available information on private market performance. And anybody using a private market benchmark should probably look at the robustness of the data that goes into the benchmark in order to trust that data.
Are we going to see a lot of exits, IPOs perhaps, from private equity companies in 2026? Because certainly we've had a great NASDAQ run, but we really haven't seen the stream of IPOs from private equity shops that we expected.
Yeah, so the IPO pipeline is building in the second half of the year. And I think there's a chance in 2026 where we see the greatest, most highly valued venture-backed IPO ever. And so that's something to watch. There's other liquidity options in the market as well. Private equity trading with private equity to create liquidity for investors.
Are you counting on lower interest rates going forward to help that pipeline get released? Because we saw private equity invest in a lot of companies when rates were low, and then they came higher and it's harder for them to get out. So are they expecting rates to be low in order for them to get out?
I think they're waiting for rates to be low. I like to say that the credit markets are the third party in the room that influences a velocity of capital. And now that we've got visibility that interest rates are probably going to bottom in the middle of 2026, buyers are willing to lean forward and put prices forward that sellers are willing to trade at. And the credit markets will dictate that trading.
Can you talk about the AI boom and how it's affecting HarbourVest in particular?
Yeah, so AI is pervasive. We call it the AI of everywhere, and it's intersecting private markets, including HarbourVest. But I think broader technology is coming into our space and really driving information flow, efficiency in private markets. And that'll be something that's really interesting to watch as we kind of go through 26 and into the future.
And then finally, can you tell a person who's wary of investing in private markets why it's safe from a liquidity standpoint and from a cost standpoint, especially when you compare it to the public markets, which have done very well over the past 3 years?
Yeah, so first, I'd say anybody investing in private markets should understand it is an illiquid asset class, and it's not the first place they should go if they need liquidity. But it plays a role in a portfolio. It's a diversifier. It gives an investor access to a part of the market that's not available through the public markets. And if done well, it can outperform a public market portfolio over the long run. So I wouldn't be too distracted by short-term comparisons.
All right, well, thanks a lot for coming on and talking about it.
Yeah, thanks, Greg. Appreciate it.